Today marks the 1-year anniversary of my investing journey and the start of my YouTube channel. As you know, if you've been following me for a while, I highlight my tax-free savings account, and recently I added my RRSP, but the reality is this is just a portion of our entire portfolio, and so today I thought I would open up the entire portfolio and share every part of it with you, including how it's performed, how I built it up, and the dividends that we've earned up to today. As usual, the first thing that we're going to do is we're going to jump into my portfolio, we're going to look at the metrics, we're going to buy some stocks, and we're going to see what dividends we've earned since the last video that I posted. My name's Darren. This is the Crazy Canuck Investor, where I try to make investing a little bit easier for beginners by sharing my journey and all the lessons that I learned along the way, because let's face it, there's nothing that gets you ready for the first day of your investing journey. Now, I want to start off a little bit differently. Normally we go right into an investing subject, but today I want to share a series that we've been watching. It might be of interest to some of you. We're watching the series What If, which stars Renee Zellweger. It's a 10-part drama, and man, it kept us on the edge of our seat. We actually binge watched it over a few days. So if you guys have an interesting movie or series that you're watching, please leave it in the comments. We're always looking for something else to watch. All right, so my entire account is comprised of 4 separate accounts. These are the ones that I actually highlight on the channel, and that's my cash account, my TFSA, my RRSP, and our kids' RESP. So we're going to go through each one of those and have a quick look at them. So starting off with the entire portfolio, it's up to $139,121. And of course, this is done through regular contributions every week. I have them set up on auto payments so that I don't even see the money. My paycheck comes in, goes in our bank account, and then it's automatically put right into our investing account. All right, so my cash account's up to $36,719. This account pays 4.5% interest. It's our savings account and our emergency fund. Now, if you watched my last video, I talked about making the switch from the big bank to no-fee banking. It's something that we are definitely moving towards, but it wasn't quite as simple as I had hoped, because we do have some rewards that we hold with the big bank, and if we step away from it without giving proper consideration, we'll lose some of those rewards. So in the meantime, we're still working on a plan to transition, and that might mean just being with Wealthsimple, because if you have your paycheck deposited into your cash account, you get 5% interest, or it might be a hybrid of having Wealthsimple and EQ Bank. We're not too sure on that just yet, so we're still moving forward with that. So my RRSP is up to $16,645, and it's performing fairly well with an all-time return of 10%. Now, I don't make regular contributions to this account because I have a spousal. So I make a little bit more money than my wife does. And so to share that income so that when we retire, she can take it out at a lower tax bracket, I take money that I would normally put in my RRSP and put it into a spousal RRSP, and then she'll take that out later in life at a lower tax bracket. So the kids' RESP is up to $61,707. And it is the best performing account that we have currently, and it's up 13% right now. And this is a robo account, so I don't manage it, so I do pay some small fees, but even at 13%, it's still performing really well. From the inception of the account, it's up about $7,000 in total, so I'm pretty happy with that. So jumping over to my tax-free savings account, it's at $23,870. And this week, we have $92.57 from dividends, and I'll go through and break down what those are. Okay, so XIC, the total Canadian market, paid out $1.79 in my tax-free savings account, and I just added this ETF not long ago, so of course the dividend's not going to be very high right now. XEI, which I've held basically right from the start when I opened this account, paid out $10.68. BAM, which is Brookfield Asset Management, which is one of my single stock positions, it paid out $13.35. Now, something interesting about this stock is it's grown quite a bit. At one point, I think it was up 39%, but as the markets go, it did drop down, and I believe it's sitting somewhere around 28 or 27% increase in my account. So that's great, and it pays a decent dividend every quarter. Then you can see that I have this manufactured dividend. It's $4.08, and I'll be honest with you, I'm not too sure which stock it's associated to because I'm still learning about the stock lending. What's stock lending? Essentially, I loan my stocks out to another person or investor, and they in turn then utilize that stock to invest, and by doing so, I get some money back. So when I'm done talking about my dividends, I'll show you about my stock lending. Okay, so we have another manufactured dividend that was $20.69. And the mainstay, or sort of the biggest part of my portfolio, which is the ETF VFV, which holds the S&P 500, paid out $29.76. And of course, I've added to that ETF over time, and it's grown. And obviously then, of course, the dividend pays out a little bit higher each time. And then we have QQC, which is the NASDAQ 100. It's $1.37 it paid out. And I have one covered call, which is performing really well right now, which is not really the norm. Covered calls can depreciate in value, but this one is holding its own. In fact, it's grown a little bit, and it paid out $7.73. Now, I haven't added any to that particular position with that covered call. I'm adding it to other things, which we'll talk about in a bit. And then last one is REI, which is a real estate REIT. It paid out 56 cents. And then you can see I have another manufactured dividend, which was $1.94. And I'm sorry, folks, I'm not too sure which is which because, well, Simple doesn't seem to tell you which one it was associated to. I'd have to figure out the math based on last month's payouts, which dividend it was. So I apologize for not having that available to you. But if I figure it out, I will definitely let you know. All right, so over to stock lending. This is something that I've had turned on for probably 3 or 4 months. And it's definitely not a high income earner. But in essence, all I'm doing is the shares that I hold, I'm loaning them to somebody else. And in turn, I make a little bit of money at the end of the month when they pay out. And so in this case, so far, I've earned a whopping 4 cents. And we can see by the history in Wealthsimple that I'm basically earning 1 cent a month right now. But of course, that's going to grow, and it's free money. It's I have a buy and hold strategy for the most part. So I don't intend on selling any of these stocks. So really, it doesn't impact me in any way right now. But as a beginner, you never know, I might learn something new and I might have to change that strategy. All right, so let's get into buying some stocks. What we're going to do is we're going to take some money from my cash account and we're going to put it into my TFSA. And today, I'm going to put $1,000 in. Now, in the past, I've been putting $500 every 2 weeks. But after sitting down and looking at the future, keep in mind, I'm not young like a lot of you could be. If you're really young, then these numbers will not apply to you and you want to adjust accordingly and then grow them over time. Now, I started investing at 50. I'm 51 now, so my time horizon's quite short comparatively to everybody else that might be younger than me. So I have about 10 years of investing before I retire. Now, there will be more time where that money will continue to grow, but at 10 years when I retire, there is a possibility that we might start drawing down on that money. Now, full disclosure, I do have a pension, so my wife and I could live off that pension and allow this money to grow a little bit longer before we have to start drawing down on it. So for now, every 2 weeks, I'm going to be putting $1,000 into this account. And that equates to about $24,000 annually, and that money will continue to grow over time. And if you're wondering why I would choose these numbers, I actually used a calculator in a previous episode, and I'll put the link right here on the screen so that you can see which video that one is. And that calculator then helped me figure out how much money we would need in retirement. All right, so we have our $1,000 deposited in the account, and of course there was already $92.57 in dividends that were sitting in there. The total amount we'll be investing is $1,092.57. Now, I use passive. Now, the spousal account that I have is with Questrade, and because I'm with Questrade, I get to use passive for free. And what I like about passive is you can use your asset allocation through this program, and it will tell you based on the amount of money that you have what stocks or ETFs that you should be buying to keep your asset allocation in line with what you set up. Now, I mentioned asset allocation. That's simply a recipe is almost the way I would put it. A formula of how much of each holding you would like to have. And I did do a video on that. I'll put it up on the screen if you're interested. I think it's probably one of the most important things that you will do in your portfolio, and you should do it early on. I wish I had done it early when I started. So Make sure to check that video out because it will help you lay the groundwork for how you're going to build your portfolio over time. So we're going to jump into passive and we're going to have a quick look at that. Okay, so passive is suggesting, based on the money that I have 4 trades to make. One is to buy Plaza REIT, the other is to buy VRE, which is another REIT, but it's an ETF. The other is to buy XEF, and then finally XIC. So today, because this will be the first time that I actually do this, XEF was a new addition to my portfolio within the last, say, month and a bit. And why? Because it gives me some international diversification. It has over 1,500 stocks and it's from all around the world, including places like Asia, Europe, and Australia. I'm very curious if any of you have something like this in your portfolio, and if you do, what are you holding? Leave it in the comments. All right, so we're gonna buy 13 shares of XIC, that's the total Canadian stock market. We're gonna buy 13 shares of XEF. Okay, perfect. All right. And then we're going to buy 4 shares of the ETF VRE. And finally, we're going to buy 6 shares of Plaza REIT. All right, perfect. Now here's where the power of passive really comes to play. So we have our asset allocation set up, and I can determine based on passive how accurate or how close I am to that asset allocation that I set up. So we're just going to quickly have a look now that the purchases are made and what the asset allocation looks like or how close we are. The beauty here is that I'm 91% accurate, so I'm getting pretty close to the benchmarks that I wanted to set up in my asset allocation. And of course, every time I add funds and buy holdings, it will adjust accordingly. So 2 weeks from now, when I put my next allotment of money in, it's going to make some suggestions for me as to what to buy. And it bases it on how each percentage is set up in my asset allocation. So if we have a quick look here, XEF, we're up to 11.6%. I set that up to a target of 15%. So we're slowly making our way there. And with XIC, it's set up for 8% and we're at 6.1. So we're closing in on those targets. And if we scroll down and have a look at VRE, I have that set at 5% and we're at 3.8%. Now in last week, it was much closer because the portfolio was slightly smaller. As we add more money, of course, it's going to make me adjust accordingly, and VRE was one of those things that we needed to add. And the last one was Plaza REIT. The target is 1% of the whole portfolio, and it's currently sitting at 0.8, so we're really close. Okay, so now for the part I think you've probably all been waiting for, and I know that the way my videos are structured, I usually talk about this stuff at the end because I'm so excited to get in and buy some stocks. So here we go. Here is the entire portfolio. Okay, so we're going to walk through this step by step. We're going to look at the entire portfolio. This kind of highlights some of the important parts of passive, why I like it. And you can set your dashboard up. You'll see at the top left here, there's a customized dashboard. I have it set the way that I like it. So the first thing that I get to see is all of my contributions over the last 12 months. So in the last 12 months, I've made contributions totaling to all of our accounts, $83,493. Then we skip right over to the other side and we get to see the total holdings, which is $246,352. Okay, now we'll go through each account one by one so you can have a quick overview of it. So we're going to start off with my spousal account. Now, I've been working on asset allocation within this account. If you've watched some of my earlier videos, you'll hear me say that, of course, as a beginner, I didn't really know what I was doing, and I started off with what I might call the shotgun approach. And I bought a bunch of different things, very broad, I guess, covered calls, individual holdings, ETFs, REITs. And now I'm trying to fine tune that. Again, this is DIY. This is me learning on the fly. I don't have anybody advising me. And of course, if you don't have an advisor or this is not something that you think you can handle, you should definitely go and look for an advisor. For me, I think I can handle this, so that's why I'm doing it DIY. So looking at the spousal account, the total account is at $66,331, and there are some regular contributions I'm making to this. The a cash account with Wealthsimple pays interest, which is taxable. So that 4.5% interest is taxable, and every month that I get interest, I then take that money and I deposit it into the spousal account so then I can get the tax benefit at the end of the year. It's going to total somewhere around $1,200. So we're still getting growth out of that money, and we're getting the tax benefit by throwing it back into the spousal account. So those are some contributions that we're making to the spousal. The other thing that I'm doing is the tax return, total tax return. So when our tax return come back, which it already did, I take that money and I'm going to roll it right back into the spousal. So every year I'll get this sort of revolving tax refund by putting more money into that spousal. Then my wife will take it out later when it's at a bit lower tax bracket. Okay, and we've already talked about my TFSA, but we'll just glance over it again. It's at $24,799. We're at 91% accuracy with the asset allocation. Again, this is the one I'm focusing on the most, and what I learned in this account that I applied to the other ones. But of course, with the holdings that I bought when I opened these accounts, it's a bit messy right now as I try to fix things up. And of course, we have my RRSP, which is at $16,645. And you can see the accuracy, it's not that great. That's because I'm still working on this asset allocation idea. The ETFs that I'm trying to introduce right now, broadly across all of the accounts, is AVUV and AVDV, both ETFs that focus on small cap companies. My general understanding here is that by investing in smaller cap companies, there's more potential for growth and then higher expected returns. Now, I might have that wrong, and if you think I've got that wrong, please provide me with some feedback. Remember, this is a sort of a two-way conversation, if you will. I'm sharing with you, but I can also learn from other people. But that's my general understanding, so I'm trying to build that up in some of the other accounts. Now, my wife does have a TFSA, and I'm investing in my TFSA our money, but I thought it would be a good idea to teach my kids about investing. And so we're utilizing my wife's TFSA right now. One of the things that I want to do is likely open up accounts for both of my kids, which are 9 and 11 right now. And in the meantime, we'll be able to teach them all of the things that I'm learning so that they don't become old like me and start investing late in life. I want them to start learning about it now. So we're using this account for that purpose. Now, this account's small. It only has $967 in it, but we're doing a couple of things. The kids are helping me manage the account, and they're doing it through simple things. I did do a short video where I show you that returning your pop cans can bring money in. And while some of you may think that that's not uber relevant, my kids, this is a way they can generate money because they don't make money anywhere else. So this is part of one of their chores. So they have chores at home, they make money, and then of course they earn money with the pop cans. And so by doing this, we then take that money and invest it into this account for them so that we're teaching them how to invest. Okay, so now we're at my wife's RRSP. This is the biggest account currently that we have, and it has $100,000 in it. And in this account, I'm definitely building that asset allocation to diversify into various areas. So it's going to be Canadian, North American, international. It's going to be large cap and small cap. Now again, I'm learning, so as I learn, I add new things. And this account is definitely that. You can see that the accuracy is pretty low right now for the asset allocation that I've set up, but we're going to change that over time. Definitely one of the big lessons that I've learned is investing is not a fast thing. It takes time, and you need to learn, analyze, and implement change in order to diversify and build your portfolio. So taking a quick look at the holdings in this account, it should give you a general idea what I'm trying to build as far as asset allocation. So we hold VU in that account, and right now the target for that is 25%, and we're at 30%. It was where I started investing. It's the ETF that I focused on the most. But as I learned a little bit, I realized that I need to diversify a bit more. So I added in AVUV and AVDV recently. Right now, those are set at 10% and 6%, and we only have 1.9 and 1.2%, but the tax return is going to play a bit of a role in that. Now I will scroll through the other holdings in this one. These are individual holdings. I purchased these when I started these accounts. I'm not sure if I'm going to hang on to these holdings or not. Some of them have performed fairly well. As you can see, like one of them, for instance, is Amazon. I hold some Coke in here, which is considered to be a good dividend stock. I'm not too sure what I'm going to do with single holdings right now, but for now they exist, so I'll just scroll through it. You can always go back and watch this again on your own time just to see what's there. And just one other thing I wanted to mention about my wife's RRSP. She had two separate ones, and so when I opened our accounts, I had one with Wealthsimple. It was a very small portion of her portfolio, and the other part was with Questrade. Recently, within the last month or so, when I merged them, now you have all of these different holdings because I had purchased different things in both of these accounts. And so now I have a lot of separate holdings within this account. My goal as I move forward will likely be to trim some of these positions and have some core positions with that asset allocation of diversification through ETFs, and then hold approximately 25% of the portfolio, say, in single stock positions. Okay, so now here is the overall picture. And sadly, because I moved my wife's account recently, this isn't completely accurate, but it's accurate as of today. And I have a separate spreadsheet that I'll show you the total dividends that I've earned over time, but I wanted to show you what it looks like from passive's perspective. So we can see at the top all of the contributions and withdrawals that I've made. I can see I've not made any withdrawals. It's just been consistent contributions to the account. So the net contributions are $83,000. I've made contributions every 12 months. It says that the net change is $101,000, but that's not completely true because I had moved that one account from Questrade over, so the disparity is not accounted for there. I'm not too sure if that will sort itself out later as time goes on. So I would assume the rate of return here is not completely accurate, saying it's 9%. It may or may not be. It says the total investment growth is $17,000. I believe that's pretty accurate. It says that I'm getting an average of $520 in dividends a month. And this is the part that I like, is it tracks your commissions. So with Wealthsimple, there's no commissions. However, with Questrade, there are. It's $5 a trade. With Questrade, you can purchase an ETF. It's free, but when you sell it, there's a $5 commission. If you're buying a single stock position, $5 to purchase and $5 to sell. Moving right down, it's telling me that I have $505 in savings. Now that's because of Wealthsimple's platform where they don't charge anything for trading. And lastly, the dividend income that's been earned over the last year is $6,246. That is not accurate. It changed as soon as I moved my wife's account over and blended them together. So we're going to jump over to the spreadsheet that I have, and I'll show you the total dividends that I earned over the last year. All right, so when I first started out investing, the first thing I did was try to figure out how I could track all of my stocks and all of my dividends. And shout out to Canadian in a T-shirt. He's one of the biggest personalities in the investing world, at least in my eyes. There are lots of other folks, and if you want to check his channel out, he's very well versed. He has lots of great videos, so it'd be worth checking him out. Remember, I'm a beginner. I'm sharing the beginner's journey in the hopes that you'll learn some lessons from me, but he is definitely someone that I learned a lot from. And what he provided was a spreadsheet to track all of the stocks, and from that, I built a tracking spreadsheet for all the dividends as well. And so here you can see it on the screen. I broke it up into years. So in 2023, I started in April. As I said, it's the 1-year anniversary. In the year of 2023, I earned $6,983 in dividends. And currently, as of 2024, I've earned $4,080 in total dividends. And when you add all of those together to date, that's April to April, I've earned $11,063 in dividends. And of course, all of those have been reinvested back into the entire portfolio so that the portfolio continues to grow. That is the power of compounding. You don't want to interrupt that. You want to keep it working, and so far it's doing great. And if you look at the screen, you'll see the dividends growing month after month. All right, so we've talked about the Netflix show. Remember What If? Check it out. It's definitely worth it, I think. If you like drama series, let me know what you're watching. And finally, I went over my entire portfolio and shared everything with you. I think what I'll do is once a month, I'll probably share the entire portfolio at the end of the month. And in the meantime, we'll do the bi-weekly buys. I am working on a video for stock events. It'll go over what stock events is and all the components of it, just like the video that I did on passive. So if you really like this content, please give it a thumbs up, hit that subscribe button. Right now we're up to 401 subscribers. I am absolutely blown away. I never expected that, and thank you for the loyalty of those people that have watched. Even if you're not subscribed, I appreciate you watching the content, and hopefully you're able to take something away from it. So for now, we'll sign off, and we'll see you on the next one.